Hey, Wizard. So I'm busy working on a new arbitrage tool at the moment, but something hit me this morning and I couldn't believe I hadn't done a video on it before. So here we're looking at Pax Gold, which is supposedly a crypto backed by physical gold. Whether or not it is not the point of this video. Whether you can trust it or not, probably not, is not the point of this video. But there's also Tether gold backed by physical gold. I did see a funny comment on YouTube saying, since when was Tether even backed by US dollars? Do you remember that? I don't. But it kind of cracked me up. So I'm not saying you can trust these coins, but what I am saying is they're supposed to be tracking gold. And from what I can tell from the charts, they've basically been doing that. And so one has to wonder, is there a potential pairs trade here, an arbitrage trade or statistical arbitrage trade that you can make trading one against the other? What do I mean by that? Well, I'll go into that in a bit more detail. But before I do that, there's also this SPDR Gold Trust. So if you put in GLD, this is not in crypto now. This is in your standard markets, your ETFs, etc. This is SPDR Gold Trust. And this also tracks gold. So if we head over to TradingView, actually, I've got a chart up here. We're going to kill this chart. So I'm just going to put in here a line chart. And I'm going to put in Paxos Gold, which the ticker for that is PAXG, and that's $2. So I'll just pull this based on Kraken or Gemini. Take a pick. I'll just pick Kraken. Why not? So here's Paxos Gold. Now let's compare that to Tether Gold, which is XAUT USD. And there we go. We've got something. Let me just sit here. XAUT USD on Bitfinex. Right. So if we go and select that there, ironic that that's on Bitfinex, only that UST gold-backed coin. But anyway, and then there's a third one, which is GLD, but I'll come back to that in a minute. Let's look here at the prices, right? So if we're not looking at a spread or anything like that right now. We'll look at that in a moment. But look at these two prices and how these move together, right? They are constantly diverging and converging. I mean, you can just see that's happening because I'm looking over a long enough time frame here on a daily chart. I don't know what it'll look like on hourly. I'm pretty sure we can easily go and have a look at that. So let's look at, I don't know, like a 1 hour here as well. And there again, we can see these divergences and convergences, etc. I'm just going to switch it back to daily for now because I'm not going to go too much into detail. What I want to do is just point this out. I haven't spent much time on it, but I wanted to get a video out to show you. This looks like a pretty good trade, and we're going to go and backtest it together shortly to find out. So we have that, and then if I add on another one, which is the GLD, this is what I found really interesting, is when you add GLD here, which is this light blue line, you can see that these prices clearly all follow, the gold price, but they're not all exactly the same, but there will always be, and they seem to continue, diverging and converging back together again. So, we can't just do this by eye. We need to rely on statistical methods. We use something called co-integration. For those who have followed the channel for a while, you'll know all about statistical arbitrage and co-integration and all of that. We're not going to do any heavy math here. We're literally just going to use a tool to go and have a look at Paxos Gold and Tether Gold and just look at that. To do this against GLD, I could do that as well, but it's going to take a bit longer. So what I'm going to do is just pull Paxos Gold and Tether Gold and have a look at how that would have looked. So actually, let's go over here. I've got Crypto Wizards open. So I'm going to use the ZScore tool for this. And because these are on different exchanges, I'm going to select FMP. And I'm going to put in PAX, Paxos Gold. So PAXG was that? What did we put that as? Let me just go back and look here. So Paxos Gold was PAXG USD. Yeah, that's right. So PAXG USD. And then it was XAUT USD was the other one. And FMP actually have data for both of these. So if I go and run this data, let's say I'll just take the default daily data over a year and have a look at that. We could change it to 2 years, etc., but it's going to look virtually the same. You can see here these prices are converging and diverging. But what's more important is the spread. This is now basically looking at the difference between these two prices and multiplying it by a factor to say how much of one coin would I need really to buy the other. And then you will see the zero line. So what you're always looking for when you're doing pairs trading is you're looking for these assets which are co-integrated, right? This is showing that they co-integrated. What you're looking for here is an asset where the difference between the two is always crossing this zero line over here. And this is happening all the time. I mean, this is literally a perfect looking spread in terms of how it just hovers around the zero line. But you can see there are these big drops and spikes in opportunities. And so what you're trading is you're trading the spread. When the spread's low, you would be going long on one coin and short on the other. One would be losing money, one would be making. But because they are going to converge again, you're always making profit. Now, I say you're always making profit. Pairs trading is not risk-free. You can lose your money doing it too. But this here is what we call arbitrage, statistical arbitrage, right? So it's a much lower risk form of trading. And here's the Z-score on that spread. So this supposedly will give us the signals for when to exit and enter trades. If this is all very new to you, by the way, feel free to go and look at the statistical arbitrage course on Udemy and just go through the theory of that. If you're a member of Crypto Wizards, that's free. You know, just go over here to the training tab when you're at Crypto Wizards, and you can go and do that course. It's this one here. There is an issue with WebSockets, etc. It's a bit outdated, but at least you should get the theory down. So anyway, so let's come back here. Let's run that again. So we had PAXG USD, and we had XAUT USD, and that was over 1 year. Now let's do a back test on this to see how it would have performed. So I'm going to do a back test. And I'm looking at the Z-score here, and the Z-score is basically measuring this movement against its like historical average over, say, a 20-day or 40-day period, etc. And I'm going to say, you know, anytime the Z-score gets as low as, say, 2 standard deviations, either above or below, then either go long on the pair or short on the pair. Going long would be, you know, go long on asset 1, go short on asset 2. Going short would be go long on asset 2, go short on asset 1. And then close the trade when the Z-score reaches 0, when it reverts back to the mean, right? So statistical arbitrage is known as a mean reverting strategy. I'll just use a 21-day Z-score. I'm not going to do anything fancy here and optimize this. But rather than waiting for it to go back to, say, 1.5 or 2 standard deviations on the other side, I'm just going to say, you know, when it reverts back to the mean, when it's 0. I could lag the results, yes or no. It's back testing. It's never going to be perfect. But here we go. Let's just go and run this and see. And I ran it from my mobile phone this morning. So I think I've used pretty much the same settings. I was sort of playing around with it. I woke up super early this morning because I was excited about some coding I was doing. Okay, so here's the results. So here it's actually saying you would have got, with these settings, a 10% return. The Sharpe ratio is really good, right? A Sharpe ratio of 1.6 means for every dollar of risk you're taking, you're getting 1.6 back. So it's very, to me, I look at it like a risk to reward calculation. So that's really not so bad. What if we actually change this to be, I don't know, something like 1.1 and go and run the back test on that, see what that comes back with. So rather than the Z-score being as far as 2, because you can see it doesn't happen as often, what if we just increase the frequency of trades? And you can see here, we actually hit about the same, but our win rate has gone up. Basically, we're just trading more, but the win rate of this strategy is extraordinarily high. So if I download the PDF and just go and look at that, we can scroll down and you can see here the green line is showing you where we're making money on asset 1 or losing money on asset 1, which is the asset 2, XAUT USD. The pink line is Pax Gold, where we were losing money on that. But the two combined together are the arbitrage trades. So your net position is this blue line. And you can see here, and this is shown in the Sharpe ratio as well, like you're just not losing money. Like it's crazy looking at this. And of course, this is back testing, so take that with a pinch of salt. But if I look at my underwater plots here, like the lowest here is negative 0.12. That's tiny. Like it's tiny. Like we're not looking at very big drawdowns at all. Looking at this, so it's very, very, very small, and you can see here our equity curve looks extremely healthy. So this, to me was a really interesting trade. You basically are just trading the idea that these are going to diverge and converge back together. Sorry, I'm sort of going through the PDF, not really explaining much here, but it's telling me that in this trade, you can see here in terms of returns, we had one return that was quite far on the negative side, but most of the time the returns are skewed in a very positive way in terms of your net returns here. If you look at the distribution of your returns on a histogram, like it's just looking very, very strong. You've got a decent number of trades going on here. I thought it was worth looking at. I mean, from my perspective, the biggest risk here is going to be that you're trading assets which there could be some news that comes out one day. Let's say you're long on Paxos gold, and all of a sudden the news comes out like, oh no, it's not backed and there's a big problem and it goes to like zero or whatever. Whenever you're dealing with crypto, it's hugely risky. But it's so easy to find these opportunities. They're literally all over the place. And I was actually really inspired by, one of the wizards. I won't mention who they are right now, but, it's a gentleman who I converse with occasionally on email, who's done an extremely good job with statistical arbitrage. And, this stuff is powerful in crypto from my perspective. I don't know what your opinion is. But my opinion is it's quite powerful, and I wanted to show this to you. It's very exciting. Anyway, hope you found it valuable. At the moment, I've got my head buried in code, building some new tools and that. So if you don't hear from me for a while, it's because I'm interested in some cool stuff that we're doing here for Crypto Wizards and for the wizards at Crypto Wizards. But this was worth pushing out. So until the next one, take care. Talk soon.